following presentation is brought to you as a courtesy of Forex Academy. This is part of our service, Courses on Demand. If you find this interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all of our services for free. Your like is also highly appreciated. Enjoy!
Now, to put all this together, let's have a quick look at actually using volume as trading strategies. What I want to do is highlight 3 ways to improve your trading strategy using volume as an indicator. Using volume to confirm trends, using volume to confirm breakouts, and using volume to identify reversals. So first and foremost, let's understand the concept of using volume to confirm trends. An increase of volume means that there are a greater number of market participants in agreement about the price movement it coincides with. So simply, a greater number of market traders agree that the price is moving in this direction. The same applies when market begins trending in a primary direction. Okay, so as we have a more mature trend, there's a more constructive level of agreement between traders, and that actually looks toward the volume to say, well, as traders come together, the trend is very, very well defined. There's more belief, there's more volume interaction with this instrument in particular, and that will lead to continuation of the trend. During a strong trend, we commonly see volume increase when price is moving in the direction of the trend, and volume decrease when price is moving counter to the trend. When this occurs, traders believe the trend is more convincing and will act as a signal that the trend is more likely to continue. Absolutely. And it's worth noting that it's actually the opposite. So the greater the disparity in volume during trend and counter trend moves, the stronger the trend. Okay. Volume trading strategies, using volume to confirm breakouts. Now, we did have a look at the cocoa market within this lesson to actually look for a confirmation of breakouts. One of the greatest fears for traders is encountering a false breakout, actually buying the top of a candle that will reverse and result in a loss. This is when price breaks a major support of level of resistance, but then reverses to the original side. To mitigate falling for a false breakout, traders often wait until the current candle actually closes beyond the support or resistance level before placing the trade. This is a good technique, but requires waiting for confirmation. So that's certainly worth noting. A good technique is to wait for the close of the candle to give you that confirmation. However, it requires you waiting, and you often most likely will get a poorer price or not able to preempt the trade, as you have to wait until the market closes above the level of support and resistance, or below, depending where you're trading or what trade position you're taking. We can actually do this in another method. Another way we can confirm a breakout is by using volume. During a breakout, it is common to see a spike in volume, which is simply an increase in volume. And this increase in volume represents a larger amount of participants that agree with the breakout that is occurring, and can actually act as confirmation, another earlier sign of confirmation that price could continue to move in the direction of the breakout. And of course, using volume to identify reversals. Volume can be helpful in identifying potential reversals. Why could that be helpful? Well, trends do not last forever. We know that as traders, trends do not last forever. At some point, a reversal will take place. Traders then will look at these opportunities in much more mature trends. Given that trends don't last forever, a very mature trend, particularly in an asset class such as a forex market where there's a lot more volatility, we look for actually looking for pullbacks or trend reversals. But timing a reversal, we know it's very difficult and very costly when we are wrong. Volume can be used to assist us in identifying reversals by looking for times when volume is decreasing at the same time the trend is beginning to stall. So it's very important. As volume is decreasing within the trend, as momentum starts to fade, we can look at the price action, tie in the volume story with the price action, and actually look to see when that reversal happens, or preempt that reversal with a low introduction of volume into the trend. And as the pullback starts to begin, or perhaps we see some reverse candlestick price action, a small increase in volume, then we can look to actually identify that as a long-term reversal. So that finishes us off with a very, very nice 3 constructive trading strategies, both trading with the trend, using volume to identify a reversal of that trend, and obviously using volume to identify the breakout opportunities within those areas of levels of support and resistance.